He's got a multi-year mission, and he would tell you that we're early innings. And frankly, I usually don't like that kind of analogy, but I think they're in early innings.
You do?
Yes,
I continue to believe that.
Yeah, well, I've been right. So, well, I don't mean to be braggadocio.
Listen, we're going to spend an awful lot of time, though, continuing to question the spend that will take place next year by the hyperscalers, the enormity of which is almost hard to calculate. $300 billion. Our next guest out with a new note saying the company's path to a $4 trillion market capitalization begins today with, quote, another drop-the-mic performance. He also thinks tech stock will continue to rally into year-end. If you haven't figured it out, he is Dan Ives, Wedbush Securities Global Head of Technology Research. Has a buy rating on Nvidia. Price target's 200. Why is it going to be a drop-the-mic quarter?
I think right now, demand to supply is 15 to 1. And, they're the only game in town. And from all of our Asia trips that we talked about here on the show, it is just the beginning of this AI revolution. And I think as you start to see with Blackwell, Street's still underestimating what this is going to do as all the hyperscalers start to build out that AI CapEx at the top of that mountain. It's the godfather of AI, Jensen, Nvidia. And I think that's why tonight it's going to be a drop the mic, get the popcorn out quarter.
Is it going to be from the numbers reported, or is it going to also be from the commentary around guidance?
Well, I think especially guidance, because Blackwell, when you look, we could be looking at a trajectory 20, 25, 30 billion a year, right? And if you look at how the street sort of modeled this, I think still massively underestimated in terms of where this go over the next year or two. Look, because my view is the big question is when could this get to 200 billion of annual revenue? And I think they continue to underestimate what Nvidia and what this AI spending, this tidal wave is going to do, not just for big tech, but especially with Nvidia. And that's why when Jensen speaks, everyone listens. But it just shows what's coming second, third,
How is it to figure this out? We kind of have a sense for what all the hyperscalers, the main customers, are going to spend. They've told us in terms of their own commentary. Why is this a mystery?
Because I think many continue, whether it's Blackwell delays, worries about technology.
In an investing twist that has everyone buzzing, the spotlight falls on Nvidia and Supermicro computer, two industry titans caught in the whirlwind of the artificial intelligence revolution. Visualize a grand stage where Nvidia dazzles audiences worldwide with its cutting-edge GPU performances, setting the pace for computational advancements, while Supermicro crafts an unparalleled AI-supporting cast, underpinning this digital renaissance. Amid this theater of giants, an air of intrigue lingers as seasoned investor David Shaw of D.E. Shaw & Company, synonymous with strategic brilliance and market foresight, makes an unexpected yet calculated play. His decisive portfolio adjustments have sent ripples across market waters. One of his AI marvels has seen a robust stake increase, while the other has experienced a significant reduction. The stakes are high, with the market watching attentively. Who emerges as Shaw's favored contender, and what compels a strategic withdrawal from the other? Welcome back, everyone, to Investocracy.
Over ordering, it's about the 2 and 2 model. 2 billion beat, 2 billion in terms of guidance raise. And I think when you trajectory this out, this eventually is a company. At first you're talking about dollar earnings. Now you're like, could it be $5, $6 out year earnings? But it also just shows for broader tech. Still 9:30, 10 p.m. in the AI party that I think goes to 4 a.m. And that's why I think big tech, we're looking at NASDAQ, not just 20,000 in the next few years, especially with Trump and what have you, deregulation. This is just very bullish for the tech trade.
You're referring to the average revenue beat last few quarters is about $2 billion. Some argue that it might not be as much this time. If that happens, would the price get punished?
It could a little, but I still think 2 and 2 in terms of the model, but it's also about Blackwell. In terms of what that could look like over the next few quarters. And it just goes back to 3 months ago. And the initial reaction, stocks down, bears all come out of hibernation mode in their spreadsheets. This is up 17% since the watch party. So as we continue to head in, I think, we talk about $4 trillion. I think over the next 12, 18 months, besides them and Apple and others, we're going to be talking eventually about $5 trillion market caps in tech as this fourth industrial revolution plays out.
You said that nobody's even close in terms of competition. Does that dynamic change in 2025?
Look, I think AMD obviously trying to sort of get around the corner. Others will start to ultimately. There's some private companies going to see a lot of funding in terms of trying to find who could ultimately be in this race. But they continue to be in the left lane, Bugatti going 90 miles an hour.
Nvidia's meteoric rise within the AI domain is akin to a thrilling cinematic blockbuster, with each quarter offering a new and exciting chapter. Armed with GPUs that redefine the limits of possibility in model training and inference, Nvidia has nurtured an empire built on silicon innovation and relentless progress. Unsurprisingly, Shah has doubled down on this technological powerhouse, enhancing his holdings by a remarkable 53% last quarter, a move that echoes loud and clear in financial circles. Nvidia's blueprint for success lies in its groundbreaking Blackwell architecture, the latest disruptor in its arsenal. This revolutionary paradigm is set to transform customer experiences through unparalleled speed and efficiency, establishing a benchmark that rivals scramble to keep up with. Imagine a tech revolution potent enough to generate billions in revenue in a single quarter, foreshadowing seismic gains for Nvidia's financial future. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
Wall Street awaiting a big earnings report tonight. Nvidia is due out with quarterly results after the close of trading. The watch is on to see what the chip giant will say about AI demand and what's ahead for its Blackwell GPUs. Jim, we had a long discussion yesterday about whether or not that's a dynamic for this quarter or next.
Yeah, I think that this is a very difficult product to make, Blackwell, and it's very difficult to coordinate it with what Michael Dell's doing. Michael Dell's big installer. We had this Supermicro problem, and obviously that's just, who knows, to be able to file maybe with BDO. And you've got HP Enterprises. They all have to work together with clients. You can't just say, listen, I'd like to order some of these things off the rack. As a matter of fact, the rack has to be built. That said, all that keeps happening is that orders flow in. No one has said, like yesterday was a really positive meeting with Microsoft. Today's going to be with Rockwell Automation. No one has said, you know what, you guys haven't delivered this on time. We're switching to X. The fact is you can't switch, which is a very interesting moment for a company with a multi-billion-dollar product that you can't switch even though it's delayed. And I think that speaks to their the greatest scale I've seen of a tech company. And I'm not, if someone sells it on the idea that it's pushed back to the second quarter because the yields will be better, I think that someone doesn't understand the semiconductor business. Because it's very hard to make semis, and this is much, much harder to make semis. The only thing that I could see is if AMD, and my chairperson owns both these, if AMD had a competitive product, then I think that you would be very worried. But I think AMD, even by its own admission, would say we don't have a product in that league. So Therefore, if you sell it, I think you're selling it, and then you're going to be faced with what happened last time, which is people sold it. They sold it all the way down to 98 because they felt that somehow Jensen Huang had been.
In the interconnected world of AI, Nvidia's symbiotic relationship with Supermicro, another illustrious player in this narrative, plays a critical role. Supermicro deftly integrates Nvidia GPUs into its cutting-edge data centers, forging an ecosystem so inviting it draws a constellation of clients seeking to harness the power of AI. However, as Nvidia strides confidently into success, Supermicro finds itself navigating much choppier waters. Shah's dramatic 89% reduction in Supermicro holdings reveals a growing caution among investors. The source of this hesitancy? A financial reporting delay that casts a looming threat of NASDAQ delisting over Supermicro's prospects. This uncertainty, while formidable, could be mitigated by the company's proactive steps, including the hiring of a new auditor and a clear commitment to a compliance roadmap, signaling a potential path to recovery. Despite these challenges, Supermicro's core strength lies in the robust demand from an ever-expanding AI client base. This provides a silver lining, underscoring the company's latent potential should it adeptly navigate and overcome its reporting hurdles. In market circles, jestful whispers predict investors' hearts beat faster not just for AI innovation, but for annual reports that arrive punctually. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Been reporting for the last 6 or 7 quarters. I think the reaction in the aftermarket is, hey, they need to do this at least 5 or 6 more times to justify the current valuation. If you think about the bull case here, and you've heard that many times today, it's that they can do $5 of earnings 2026 and trade at 35 times that. That's $175. That's the bull case. If they miss on any of those massive hurdle raises that they have for the next 5 or 6 quarters, the stock could be half of that. That's the challenge investors have to balance, is that there's a lot of things that can go wrong. Right now, though, the demand is fantastic.
Let me play Jensen's advocate here. The likelihood of them missing seems pretty low when you look at what looks like stability of hyperscaler demand. And the overall software demand pouring in. Microsoft at Ignite is just making the argument that people do want its AI offerings. They're continuing to spend on this stuff. So 5 or 6 quarters from now, it might be too late to get up off a hold rating. When do you do it?
Well, so consensus estimates are that NVIDIA is going to grow 50% next year. That means all those hyperscalers need to increase their already very high levels of CapEx by 50% or more. And they've been talking about, Sundar Pichai talked about overinvestment. Satya Nadella, to you yesterday, talked about catching up on investment. Those are not terms you use when you intend to continue to invest like that forever. Those are terms you use when there's a point where you're going to push the brakes. And if that happens next year, and NVIDIA has to guide to down results at any point next year, that's something investors need to be aware of.
As we draw this stock market tale of giants to a close, the horizon for NVIDIA shines brighter than ever. With its distinctive advancements and a well-crafted strategic playbook, it remains steadfast at the helm of AI innovation, suggesting a trajectory of phenomenal growth. For Supermicro, the narrative is one of resilience and potential redemption. Should it successfully realign its financial path and capitalize on the favorable AI wins, a strong rebound could indeed be on the horizon. At this pivotal investment intersection, the choice to hold onto NVIDIA shares appears seasoned and promising, an exhilarating journey into the realm of technological pioneering. Yet, as we ponder Supermicro, the potential phoenix poised for rebirth, we recognize the dynamic forces propelling both stories forward. Each investor finds themselves at a personal crossroads of decision. What do you predict? Could NVIDIA's vibrant ascent or Supermicro's potential resurgence ignite your investment resolve and drive? And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen.